The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. Relatively new product back on the market. I use this a lot in the early part of this century, but it's a first position HELOC. Great loan, has an EPR. I just did a analysis for somebody. EPR on this, 1.85%. So if you've got a bunch of equity in your property, you may want to look at this because it might save you a bunch of money and get your property paid off much quicker. Let's take a look at what's going on in the markets today. I missed it again. S&P 500 up now 9.41. The bond market, the 10-year treasury is down 6 basis points, 2.788. Mortgage-backed securities up 5 basis points, which means interest rates are down ever so slightly. And OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual lock rates with consumers across 35% of all mortgage transactions nationwide. Where did loans lock on Friday? 5.42%. The jumbos at 5.163. FHA loans 5.333. USDA for those out in the rural areas, 5.395, and the best loan on the market for those who earned it. The VA loan, 5.098 right now. Why is all of this happening? Well, a lot of fear-mongering going out there in the world right now, and we're going to talk about it probably tomorrow, about a story that I saw on the Cannabis News Network. I'm sorry, CNBC. That wasn't the Cannabis. I shouldn't go there. But it was with Grant Cardone talking about why people should not buy a house and coming up with some really stupid numbers. He might be good on social media. I think we're going to talk about maybe he needs to go back to school for a little bit of math help. It might help, and we're going to talk about that probably tomorrow. And then we look at Fed President Thomas Barkin spoke and said that the Fed needs to keep hiking. Are you ready for this? Until we see 2% on the inflation level for 3 months. Think about that. Now, how do we get from our current 8.5% inflation to 2%? It's called recession. So what he's saying here is after we're in this recession for an extended period of time to get inflation down, keep on hiking rates for another 3 months, knowing that the Fed funds rate is a lagging indicator that from the time they hike interest rates until we see it into our economy is usually anywhere from 12 to 18 months. So the Fed hike that they just did, we're not going to feel the full effects of that in the economy for another year to a year and a half. Figure that one out. Now he's talking about core PCE, the personal consumption expenditures. That number is actually at 4.8%. How are you going to get that down? I'm still telling you that's going to be an interesting one. So we'll see what Mr. Barkin has to say. Now, think about this one, another one where we can see where our adversaries are. So almost every central bank is increasing their interest rates, except for the People's Bank of China. They just cut their version of the Fed funds rate. Wonder what that's all about. And one of the leading indicators that we've used for years and years on Ron Siegel Radio is something called the Cass Freight Index. Most people have never even heard of the Cass Freight Index. It basically looks at trains, planes, and automobiles and what their consumption is from their consumers, their purchasers, their customer base. And are they consuming more freight or are they consuming less freight? Well, it's down 4% just in the month of July. Shipments are up 0.4% year over year, but down almost 2% month over month, signaling some freed up supply. That means that price is going to continue going down there. Here's a quote from Cass. We're coming into the peak season with much more free capacity. I think that's going to be a good thing from a cost perspective for those big retailers who have been struggling with a lot of cost inflation. So the prices are going to come down on that transportation because there's not enough demand. People finally are saying, you know something, I'm not going out there to buy. National Association of Home Builders Market Index declined from 55 to 49 in August. First time it's dropped beneath 50 since May of 2020. Current sales dropped 7 points to 57, while sales over the next 6 months dropped from 49 to 47. Buyer traffic dipped from 37 to 32. Builders are definitely anticipating a further slowdown. And Thursday, we're going to get some big numbers coming out for the real estate world as well. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990.